Everybody listening in, thanks for checking this out. Our whole idea and goal is to help accounting firms run it more effectively, more efficiently. And there's certain ways to do it. And we want to talk about what, why, and how. And so today's topic, run your accounting firms like a SaaS business. We have the founder of Entigrity, Shawn Parikh. And so Shawn's background working with accounting firms for the last 8 years, spoken to thousands of accountants. And so he comes to us today talking about this. But Shawn, it sounds so basic and so lame here. So where do we go with this? How do we get started with a SaaS business, a tech company here in the
Well,
accounting world?
Thanks, Chris, for having me today. And I must compliment you. You are being a part of the team. You are taking some great initiatives and educating, the audience out there. So the topic for today, as we all know, is running your accounting firm or accounting business like a SaaS business or a SaaS company. The title may sound little, you can say, a clickbait kind of a title because
Yeah.
everyone wants. SaaS businesses are very hot business, and people have been hearing about this humongous valuations of this tech businesses, which are which has a revenue model or a business model around SaaS. So let's dig deeper into it. Let's first understand what a SaaS company is. What are the typical
Yeah.
features of a SaaS company? Typically, an accounting firm would be valued at 1.5 times of their revenue. You know, but if you look at this SaaS businesses, they are valued at 100, 200 times their revenue, their profitability. Some of them are even not profitable, and don't even know or have a clarity on path to profitability, but still they are valued so highly of it. The one key reason around it is monthly recurring revenue. So the two important aspect of it is monthly or maybe periodically, it could be quarterly also, and recurring. So the money comes in irrespective of person or customer, whether active or non-active, whether they are using the business or using the service or not using the service. And the best example I can give you here is that of QuickBooks Online and QuickBooks Desktop. You know, so the idea here is QuickBooks Desktop, when you bought or when accountants buy, you have to pay a one-time license fee. With QuickBooks Online, and I know a lot of accountants are complaining about it, you have to pay every month, and you are stuck to the software because historical data lies there. There are a host of benefits. Anybody can access this from anywhere. You don't have challenges to back up. You don't have challenges on security. So there are a host of benefits around SaaS, but you have to pay every month, whether you use it a particular month or not. You have to pay by client. So this
Hmm.
is the feature about SaaS business. And as I said, the key is MRR. So let's go a little deeper into it and relate it how it is important, how we can relate this or how we can run our accounting firms like a
Right.
like a SaaS company. So let's look at one thing here. What is MRR
Yes.
in the context of accounting firms? So uh, I explained you QuickBooks Online, they charge you monthly. You charge your clients every month or every quarter instead of charging them you know a one-time fee, and and you break your revenue in a monthly basis, and that revenue kind of recurs regardless of uh, you know regardless of what happens. Your deliverables are fixed. You have list of deliverables that you have to give either monthly or quarterly, and the fees are regardless of what business is doing, regardless of the client is coming to meet you or not. So the event of fees getting accrued is time based rather than activity based. so,
Okay.
so of course you have deliverables at the end of each month or each quarter that you need to so typically accounting firms have 70% of their revenue locked in busy season or 60%, and then they are not doing anything outside of it or really chilling out. Here it breaks down your volume as well as breaks down your revenue into. So regardless of whether you're busy or not, your monthly incomes come.
So you could have different layers of services available, or is there like a one size fits all?
Well, let me come to that in my next when I say a little bit more about how to implement MRR through a
Okay.
subscription-based pricing, and we can do a whole episode on this uh, for doing how to design subscription-based pricing. But the benefits of MRR, why you should be implementing MRR. First of all, when you define your deliverables for every set of every set of services that you give, or a value pack, what I always say is your margin increases. For client, it is beneficial to pay a monthly small fee rather than a one-time huge fee. Your billing is on time, your working capital goes down, you are in negative work in progress in your billing, your invoicing and collection kind of gets automated. Today there are apps available which automates everything. The business gets scalable, you have a predictable cash flow and a predictable backend. So you systematize that, and uh, it kind of scales your business. So, and one big important benefit of implementing MRR is the the time consumed by partners in the business reduces significantly. That's what we have observed. So this is where we always say that monthly recurring revenue is so much important, and actually it will take your we have seen firms valuation skyrocketing when they say when they during the due diligence of getting merged or getting acquired, they say that probably 60% of our revenue comes through our monthly clients, or 60% of our revenue is coming through monthly recurring business. So that benefit, the value of that is much higher compared to year end fees or something like that. So that's a little bit of why we should be implementing MRR. This is all rhetoric. The real question is, how should we be doing that?
How? Yes, curious to know.
Yeah, so that's the most difficult part of, because most of the people would agree, there are hosts of benefits. It's really valuable. It makes
Right.
cash flow predictable. But the real idea is how should be implementing MRR. The first step would be add more services, add more layer. So answering to your earlier question, add more layer of services.
All right.
So it could be advisory consulting services. It could be services given more in real time rather than after the fact. It could be, adding more technology to services, adding services like planning, IRS resolution, financial planning, consulting. So adding more and more layers of services is very, very important, because businesses and client needs are varied. They have a lot of needs, rather than just accounting, bookkeeping, or year-end tax filings.
So, well, what percentage do you think should be of their clients should be in this model? All of them, or
uh, well, so that's sometimes the non-starter for a lot of firms, that my client would not be ready to pay me a monthly or a quarterly fee. Well, the idea is
right?
to convert 75% of the client and
Ah,
not the 100%.
okay.
Idea, if you are able to successfully convert 60 to 75% of your client, I think you are successful. So this is where the first step should be, for implementing MRR, you should be going to existing clients, because
Right.
existing clients where you don't have to make efforts of selling, because they are already sold to you, they'll be
Right.
more than happy to buy more from you if you
How
are
long will
able
that
to make.
shift take, do you think? So, what working with your existing clients?
Well, it's a transition. You build a backend first, and then you move there. So if you talk about the backend, add more services, build your value packs. We have seen gold, silver, and bronze packs, or we see it small, mid-size, and enterprise level packages in
Right.
subscription pricing. You know, Building a value pack is super important, because what happens is there are two reasons around it. First of all, when you build those value packs, let's say for the sake of discussion, uh, uh, gold, silver, and bronze, or bronze, silver, and gold packages, uh,
Mhm.
you actually list down all services extensively that you're going to deliver in each of the pack, and the pack upgrades. So the first is smallest activity that you're going to do. For example, it is if it's for phone support, or free cash flow advisory, or free tax planning, or free tax estimation. Let's say tax estimation would be in bronze and tax planning would be in silver. So you can quantify smallest of the activity into your those value packs, which typically people expect that's part of what you do. But when you sell it in a package, you are able to charge more for the whole package, rather than I'm going to file taxes for you for $1,000. When you do it in a way which continues to add value to the client, and list down all of the things that you're going to do for the client, the perceived value is very high, and they know that you're going to, on the back end, on the face of it, you're going to work on a lot of things for them. So
Okay.
building those value packs is important. And the first benefit, as I said, it lists down a lot of activities that you do for the client and charge for it, instead of charging it for, in a standalone way. Second important point is it differentiates the value. So when you list down 20 activities for the bronze pack and 25 activities for the silver one, those five are differentiated services. If you want them, you need to pay more for it. So so client has no reason to kind of assume that it is already included in that. So when you differentiate those levels, client would be more than happy to pay for the higher level, and they know that I'm getting higher value to it. That's where you build your value packs, or people also call it service subscription pricing
It's
model.
9 o'clock.
And what I'm going to do is I'm going to give you some links. You can put in on comment, and some of the firms that executed it well. uh, in once you build your value packs, what you should be doing is systematize your backend. So once you know that these are the list of deliverables for each segment of your clients, you know, build your you know, uh, build your backend and systematize a backend in such a way that those deliverables gets delivered without minimum intervention on your side, and this will really help you in scaling.
Mhm.
So that's what you need to start with MRR. Now, how to present to your client? We talked about go with the existing client first. Now, in
Right.
existing client, you know that there is one category who are just no. There is one category who are like maybe they'll accept monthly recurring or quarterly recurring, and then there are one which are your A clients, you know, which will be more than happy to understand this and uh, think through it. So first go to that A clients, and you will know that they'll be ready to accept it, that I want to work more for you. These are the list of things I'll be doing. We are making changes on our backend, and this is our new pricing structure. And those who accept invest more time, and they'll today client needs more value rather than checklist that this is done,
Right.
another compliance. They more need more help, they need more support, they need more guidance. So those people, those clients are your A clients. And and you will realize that I'm not saying you should let your client go. That's a little harsh step. Some of the coaches do tell that let your C category client go. I say be rational in allocating your time and energy rather than letting them go. They are paying you, so be rational, and make sure that you allocate more time and energy and resources to client who is giving you higher margins and better billings. Um, so first set of customers converts from there. Then maybe customer needs education, need more explanation of the rationale, and they'll buy in. And then some people who you think they're buyers, then they are price shoppers, as we say. Well, keep them with minimum maintenance that you that you can provide, and then keep them profitable. I always say that never say no. Although I'm of the opinion that you should have a definition of who is not your client. It is as important as who is your client, but
Right.
I leave it up to the practitioners that what they want to do about the C category. So this was like a little bit of how should implement this, feel free to drop some questions in the comment, and we will be happy to answer them.
Yeah, I think it's a really sharp idea simply because the way you structured it out and talking about the working with your existing clients, right? It's a lot easier. And then it'll also help the firm owner, partner, director kind of put this together. And then so when they have the opportunity to meet new clients, they'll have the structure in place. So I totally agree about working with your existing base, having it tiered out. And then when a new client comes on, you could determine at that point based on your feedback and working with their existing clients. So that's a great way to start and for future growth.
Yeah, absolutely. I think it's not very difficult. I mean, comparing it with a SaaS company in an absolute sense is not possible. In a relative sense or a subjective sense,
Right.
wherein uh, you can build a pool of revenue which comes to you regardless of whether you are in office or you are not.
Makes sense. Yeah. Awesome. Any other final thoughts before we wrap up here? Really
No,
good
I
insight.
think I think this is good. I think, Chris, we should continue this kind of conversation, and
Oh, for sure.
yeah.
Awesome. Well, Shawn, thank you for taking time out of your busy schedule today. And everyone else, take care. We'll be back soon. For now, be safe. Take care.
Thank you.